return to pay or claim withheld taxes unless an exception to the tax return filing requirements is met. Attach supporting documents to substantiate the individual's identity and foreign status, and we will go over the documents in the next few slides. So these are the documents you would need, whether you are helping a taxpayer apply for a new ITIN or renewing an existing ITIN. The taxpayer must provide original or certified copies of the supporting documents from the issuing agency. These documents are required to support the information provided on Form W-7. I'm just going to stop here a little bit. I need to explain when we say certifying copy, it has to be certified. Like you can't just go to the local bank and say, I need this notarized. It will not be accepted. It has to be a certified copy by by a government agency. When applying for an ITIN, you can apply by mail to the address listed there. You can apply in person. You would need to call that number there to make an appointment, or you can go to an acceptance agent. Call certifying acceptance agents or CAA. The processing time frame allows 7 weeks for the IRS to notify you for ITIN application status, 9 to 11 weeks if you submit the application during peak processing periods or if you're filing from overseas. I would really stick to that timeline. If 11 weeks and 1 day you don't have it, I would call the number and find out what's going on. In any case, I mean, you will receive a letter with a case number and so forth. So ITIN renewal process. Only ITIN holders who need to file a tax return or who will be claimed on a tax return for an allowable tax credit need to renew their ITINs. If your ITIN wasn't included on the U.S. federal tax return at least once for the last 3 tax years, your ITIN will expire on December 31st. Therefore, taxpayers should be advised that an expired ITIN can cause a refund delay, and they may be ineligible for certain tax credits, such as the Child Tax Credit and the American Opportunity Tax Credit. By submitting a Form W-7 and attach a U.S. federal tax return to renew so you would submit your W-7 and attach your U.S. federal tax return to renew your ITIN. What is a certifying acceptance agent or CAA? It's an individual or an organization authorized by the IRS to assist individuals in the process of applying for an ITIN. CAA verifies the authenticity of documents and ensures that applications are complete before they are submitted to the IRS. So they will review the W-7 and you would show them, your passport and so forth, and that negates the need to have to mail it in with your W-7. These are the CAA requirements. This is what's required for an organization to be a CAA. They must have a valid employer identification number and be established VITA TCE partner. And VITA stands for Volunteer Income Tax Assistance, and TCE stands for Tax Credit for the Elderly. Tax counseling for the elderly, I apologize. Organizations responsible parties must be a permanent full-time employee of at least 18 years of age and legal resident of the United States. CAA must be available year-round to provide services and answer questions. Organizations responsible parties must pass a tax compliance check and be current in filing and payment of any tax liability. Then they complete an IRS mandatory training, and they also have to adhere to spec, site, and quality requirements. These are the benefits of CAA. They have a positive impact on the community. It increases their client base. It enhances their reputation. and it's cost saving for the individual because they provide the service at no cost. These are just some resources that you can use for an ITIN. Thank you. And then are we answering questions now or at the end?
No, so we're going to answer the question. We're going to have Q&A session at the end. So
Okay.
let me add a few things to the ITIN. Yesterday, I was in a meeting with the New York State Department of Consumer and Workforce Protection Director, and also the Stakeholder Partnership and Education Area 2 Director. And the question came up with ITIN database within Internal Revenue Service, especially the current climate. Of course, people who apply for ITIN are individuals that don't have social security number. So in other words, individuals that may not be a citizen or green card holders. And so the question was, is the federal government going to request the IRS ITIN database for a mass deportation? At this point in time, our internal documents within the Internal Revenue Service, for example, ITIN is only document that stay within Internal Revenue Service. Not to say that the federal government cannot subpoena that information, but as of now, and since ITIN started, there has not been a time that the federal government has requested for such an activity for deportation purposes. And so you can rest assured that those are information that stay within the Internal Revenue Service. So sometimes those are the reasons why people are nervous and scared to apply for ITIN numbers. Now, there may be one incident that I can share with you. Back in 1986, President Reagan granted amnesty. And through the amnesty process, people have to prove how long they have been in the country as part of the requirements. And so those that were using ITIN to file taxes, they themselves came to IRS to request for that information so they can show proof that they have been in this country for X amount of years. So in that instance, it's the taxpayers themselves who requested the information, not IRS willingly giving it to the federal government. And so that is one thing that I want to share with you, that this database is maintained within the Internal Revenue Service, and the government or the federal government at any point in time has not requested it for deportation purposes. So that is something that I would love to share. Also, use the certifying acceptance agent because they are credible individuals or entities that Internal Revenue Service has actually vetted and accepted them. It prevents you from having to mail your official or original document to Internal Revenue Service office in Austin. There are times that those documents can get missing. And so if you go through a certifying accepting agent, they will make a copy of it. They certify the document is the original, they authenticate the document, so you don't have to mail the original document. So that is one area too. I would like to lay a little emphasis on that. And if you have a need to apply for ITIN, then you want to use the certified agent. Those individuals, you can find them on www.irs.gov. And within the search engine, you can type in certified agents and you'll be able to see one within your area. They are all over the place. They are your regular CPAs and tax practicing professionals. And so they are all over the place. And you'll be able to find them also through the IRS website. E-filing is the best way to go. E-file. I'm very sure the subsequent speakers are going to mention that as well. If you e-file, that is the best way you can get your refund very early. Now, if you paper file, then you must well know that it's going to take a while before you will get your return. There are instances where you have to paper file. If you are a victim of ID theft, most likely you have to paper file. And so things like that, that you have no control over it, then that is what it is. However, if you don't have any of those situations, you want to go ahead and do the e-filing so you can get your refund as early as possible. And so I will stop here. I believe stakeholder liaison will be the one to pick it up from here. Miss Brenda Stewart. Is Brenda here with us?
Yes, good afternoon. Good evening. Thank you so
Good.
much. And today I'm going to talk about a couple things about the gig economy. I'm going to talk about making estimated tax payments, and I'm going to talk about how you can actually have your online account where you can research the information yourself. So I'm going to go through a few things, and Nagua is going to control my screen for me. And so, what we're going to talk about, as I said, is the gig economy. Now, with the gig economy, you can go to the next slide. If you use an online platform to provide services such as renting out a space in your home, like a bedroom, or providing car rides, that would be individuals like Uber. It could be Lyft. It could be various services that you offer, connecting with customers to provide other goods and servicing. You're involved in the gig economy. And the IRS developed a gig economy tax center. You might say, what is a tax center? Well, IRS in communications liaison, as well as just IRS in general, whatever your topic is, well as industry, it could be construction. We have what we call it a tax center. That means anything that would be applicable to the type of business that you're doing. And it would list all the various tax returns and information that you would have. So, as I said, what we're going to talk about is some of the gig economy. And a lot of people may not think about them renting out a room as getting income, or they may be tax implications. But today we're going to talk about what are some of the tax implications by being involved in this gig economy. Next slide. Well, one of the things that we wanted to talk about is with you being in the gig economy and you being self employed, you're not going to receive a W 2. A W 2 is for people that actually go ahead, that work for someone, and at the end of the year, they receive a W 2, which would analyze their wages and the withholdings that the um, business have taken out. Whereas if you're self employed, you're responsible for your taxes. So what you have to complete is 1040 estimated tax payments, and that is made every quarter. And what you can do is you can make these payments through direct pay, or better known as well, you can use EFTPS, which is Electronic Federal Tax Payment System. And also, you can complete a W 4. This is Employee Withholding Allowance Certificate. But you would like to make sure that you are checking to make sure that you're not waiting to the end of the year to make these payments. Because at the end, since there is no withholding taken out and you're going to complete your tax return, it may be if you haven't made the estimated tax payments, you may owe at the end of the year. So it's important that you can help yourself by filing the taxes, making the estimated tax payments, and doing this quarterly. Next slide. What I've included in the PowerPoint is when are they due? The estimated tax payments are due on April 15th of the coming year, June 15th, September 15th, and January 15th. And how you would make these payments, as I said, by using 1040 ES. And this can be made electronically. And the fast and the easiest way to make estimated tax payments is electronically. Just like previously, George talked about how it's best to e-file. So IRS is going towards digital tools, which makes it easier for you not to have to run out to get a money order or to use a checking account, but you can do all these things physically at your computer as well as your phone. So you would want to become familiar with this in the event, again, if you're part of that gig economy. Next slide. you want to be aware of the fact these are some of the taxes, again, if you are in the gig economy, that you should be aware of. Self-employment independent contractor. So these are some: Social Security, Medicare tax, no employer matching, additional Medicare tax. And again, we talk about estimated tax payments. These are some taxes, if you're self-employed, that you should know. This is reference material that if I'm now self-employed, I am not working for someone, I should be aware of these are the things that I should know, because either you're self-employed or independent contractor, you're going to be responsible for your own taxes. Next slide. Someone may say, I do not know if I'm an independent contractor or I'm an employee. A lot of people are not aware of what is the difference, because they just may look at the fact that I'm working for someone and I'm just working. But IRS has a form, which is a form SS8, which would actually outline, and also IRS can make that determination. So IRS would make that determination to determine, are you an employee or are you actually an independent contractor? There is a difference. As an employee, what is your responsibility? Well, the person that you work for is going to tell you when to come to work, what time you should show up. They're going to give you responsibilities and duties. They're going to provide training. So all of this categorizes you as an employee of that company. An independent contractor is an individual that is going to set their own hours. You're going to tell a person when your services are available. And also, there are certain tax that you're available to take off as deductions. Next slide. There are certain depreciations you are available to take, such as gas, mileage, tools that you're buying to do your job. So it's valuable, if you are an independent contractor, to keep good records, because a lot of individuals, they're not going to remember. I mean, we're only human. There's so much we have going on every day. I mean, so it behooves you to develop a payroll system, a bookkeeping system. So that way you are able to keep account of the expenses that you're using to keep your business. What are you buying for your trade? So at the end of the year, when you prepare your documents to complete a tax return, you have all your information available to submit to your accountant or the person that's preparing your tax. Next slide. Rules for home rental, rental income and expenses. Is it a vacation property, personal use business property, casualties and disasters and theft? Now, this is important because these are things that you need to do in order to maintain your business, because now you're a part of that gig economy. So you're not depending on someone else to provide these things. So you would want to continue to know and actually keep a record of these expenses for you to maintain these properties, because they become deductions that you can actually use. By the way, it mentions casualties, disaster, and theft. And what I would recommend is, if you do own a home, become familiar with what happens if there's a disaster. You can go to irs.gov and type in disaster, what you need to do to prepare in case there's a disaster, because there's a lot of disasters going on now. But IRS can help you so that in the event that something happened to your rental, you know what to do. Most people will call their insurance company, but they may not realize that there are certain tax implications or certain tax that you can actually receive credits because of the disaster. So I just want to throw out there that while everything is going good with your rental or your business, why don't you take a picture of everything so that if a disaster occur, you know what was lost. So these are some of the tips that we're giving individuals for your business. Again, even before disaster, you know, at the end of the year, these are the things that you're spent. And if you're practicing good record keeping, don't just keep paper receipts, because paper receipts corrode after a while. You can keep electronic files, take pictures so that when you're preparing your return, you have that information available. Next slide. Independent contractor, as we discussed before, record keeping and time frames. You need to know, when is this due? You cannot totally be dependent on your accountant, whether it's your return or it's your business. Realize it's your business and you're preparing the documentation for someone to complete your tax return based on what you're giving them. So if you had to buy additional car supplies, your car, which is your main business, you need tools, your tax preparer wouldn't know that. So it's important for you to keep a receipt of these documents. It could be that you're a chef and you have to buy certain foods in order for your job to continue. You may have to buy certain equipment, business use of your home. Some of you may work at home. You are entitled to claim a certain portion of your home. You want to make sure, again, you're keeping these are records, how much that you're using, the paper that you're using to actually, if you're doing advertisement, all of these things are deductions. But when they're preparing your return, they're going to ask you for these documents. So I would suggest, as I'm sure all of you that may have a business, have a separate bank account. So when you're asked by your accountant to give the documentation, you can just go to your document or go to the statement and pull down the information so that you have it readily available, and the various business transactions. Next slide. Tax liabilities. You want to know, when should I make these estimated tax payments? Do I have employees now? Filing and paying business taxes, making sure that you're paying and filing your return. Because just like doing COVID, there were certain privileges was available, but people had to be in compliance. And a lot of people had not filed their tax returns, so they became not eligible for certain credits that SBA and other groups was given. So make sure that you are filing and paying your business taxes. Next slide. This is resource information. If you go into irs.gov, it talks about the gig economy and making sure that you're aware that we have information. We have our business publication that we use all the time, and for individuals as well, your federal tax income tax. This would be publication 17. It's online. And also we talk about publication 15A, which is an employer supplementary tax guide. So you can familiarize yourself with these resources. Next slide. I want to also remind you that you can set up your own account online. That way you do not have to pay someone, and you do not have to wait online for IRS to come to ask questions. So you can set up an online account where you can access your online information. It can give your payments. If you need a transcript, like if you're buying a house or your children for school, if once you set up this online account, you can actually go into that online account and receive information that you need on a daily basis, what's going on, so that you do not have to wait for someone else to tell you or wait for IRS to send you a letter. And let's say you lose the letter's lost. if you're able to go into your account that you set up online, you'll be able to pull this up. Next slide. Payment options. Okay, you might say, well, at this point in time, I mean, I made estimated tax payments, or I didn't make estimated tax payments, or as an individual, I'm filing my return, but now I owe. You can go to irs.gov and you can set up a payment agreement. You do not have to pay it all at once. We suggest making sure once you get all your W-2s, you can go ahead and file your return, because at least if you owe, you know that you have until April 15th to make a payment. However, if you're not able to do that, you're also able to make a payment online. You do not have to come into the office, but you can make a payment agreement. As it said, make a payment for a short-term plan or long-term plan. IRS allows you to do this, and you do not have to speak to anyone. Next slide. Well, basically, that's the end of my presentation, but I just wanted to let you know a few things. April 15th is the date the returns are due. However, if you have to file an extension, the extension is till October 15th, but it's only to file a return. If you have to pay, that extension will not do well. And basically, if you have any questions, please feel free to reach out to the IRS. And the IRS is your friend. We're here to help you, and we do presentations and stakeholder liaison. I'm from communications, and we are a public relations person, and we do radio, and we reach out to your communities. If you would like for us to speak at any of your events, please invite us, and thank you so much.
Alrighty, thank you very much, Ms. Brenda Stewart. I want to mention a few things on some of the areas that you mentioned. Estimated payments. Okay, so estimated payment is not only limited to business owners or gig economy. That can also apply to me and you. If
Right.
you owe taxes $1,000 in the previous year, then you do have a requirement to make estimated payment. You can do that by dividing the amount of money that you owe previously into four. So let's say you owe $1,000 in 2023. So 2024, you are required to make estimated payment. You can do $250 each, assuming everything remained the same. The position is the same. The amount of money you made the previous year is going to be the same. Now, if you get a promotion or something changing, you're going to make more, then you're going to have to estimate it. That's why it is called estimated payment. Now, if you are required to make estimated payment and you don't make them, then you'll be penalized for that. There's a penalty for not making estimated payments. Number two, I want to mention something about W-4. When you get an employment and you're filling out the W-4, many times people will put more numbers on that or higher numbers on that, and then they get taxed less. If you put up to 9 dependents or 9 exemptions, let me put it that way, you're going to be taxed less. However, when you file taxes at the end of the year, chances are you're going to owe more, or you're going to owe taxes because you have already taken less taxes in the course of the year. So be mindful on how many exemptions you put on the W-4. Your employer will not ask you if you really have this exemption. They don't care. You can put 9, but at the end of the year, understand that you are going to be owing taxes, or you may not get a refund. So you want to be mindful on the exemptions that you take to make sure that you don't fall victim to owing taxes, which will require you to make estimated payment the following year. One thing that also, Brenda, you mentioned is about having a separate account with whether you have if you have a business and your personal account. There's a term for that is called commingling, and commingling is actually illegal. So you want to separate your personal account from your business account. That also helps you to keep track on your business's expenses and income that is coming in. So if you have to prepare an income statement, it's much easier on you and the tax professional or accountant that you're dealing with to be able to help you to prepare that for you. So you want to stay away from that as well. Thank you very much.
George, I just want to
Now,
add one more thing is
go ahead.
please be careful of the person that you get to get your return, to prepare your return. You want to choose a preparer, not just to get you a large refund, but actually is going to explain to you about your return, and you want to make sure the person is reputable. So please be careful at choosing a preparer, as well as the various scams that we have. I've heard the scam where people have said to, I would say, unscrupulous preparers have told taxpayers that they can make a payment agreement using a gift card. Again, these are scams, so please be careful of who you choose to prepare your return. Thank you.
Okay, thank you as well. Scammers normally they target the immigrant community. That is where they make most of their money because they know you are immigrant, they know you are afraid of the law, they know you don't want to come forward, and so they will pressure you. You have to pay with what are some of the cards? This
The
dot
green
cards,
card,
the
green
green
dot card.
cards and things like that to pay that, that alone should ring a bell, pay with Apple Pay and pay with this and they pressurize you. Some will even go further to threaten you that if you don't pay, they're going to send sheriff, IRS will come and arrest you, will take your wife, the kids, the cats, the dogs, and everything else in between. That is not true. If in doubt, call IRS directly and verify if you owe taxes or anything like that before you commit any payment to anybody. So at this point, I'm going to invite taxpayer advocate. That is going to be the last team to present this evening. Then we can follow up with the Q&A. So Ms. Besada Bailey and Ms. Claudette Mathis, if you're ready.
Zero bunching and zero leaks. Your coffee ready. The payment code can be for you.
Ms. Bailey or Ms. Mathis?
Yes, hello. Good evening. Good evening, everybody. Thank you. Thank you for inviting us. It is definitely a pleasure to be here. And we know that the time is coming short, and we want to really be mindful of your time. So we're not going to go through the whole PowerPoint. I'm going to say a few words and then I'll yield the floor to Ms. Bailey to say a few words about the Taxpayer Advocate Service. As Ms. Brenda Stewart mentioned before, she said in some of her last words, she said the IRS is your friend. If you ask the average person walking the street what they think about the IRS, they probably won't say that the IRS is their friend. They will probably have negative things to say. And that one of the reasons is because the IRS is so complex. There's so many areas that the average taxpayer don't understand, the credits and being self-employed and all those different things, so that when they do file their tax returns, they might make a mistake and then they try to call and they don't get an answer. At the Taxpayer Advocate Service, we are your voice at the IRS, and so we're here to help you. We're here to help you navigate the IRS system. If you're missing your tax return or you get a bill from the IRS that you don't think you owe and you don't understand it, we are here to help you navigate that system. I'm going to let Ms. Bailey talk right now.
Good evening, everyone. It's a pleasure to be here with you guys. As my partner said, we're here to change the face of the IRS. So Taxpayer Advocate Service, we're your voice at the IRS, and I just want to go over some pre-filing season as the filing season officially kicks off on January 27th. We are encouraging you to make sure that you're finding a professional return preparer if you don't prepare your own taxes. So please make sure that you're looking for a reputable tax preparer. We have free help, VITA and TCE, volunteer income tax assistance, and tax credits for the elderly. So we have different things. Of course, we have free phone, which you can find on the irs.gov website to see if you qualify for the different programs for the different companies that offer free file. We also have direct file, and that is definitely something that we are pushing. So save time and money by filing your taxes directly with the IRS. So during the 2024 filing season, more than 3 million taxpayers use free file. So we use direct file. So we're definitely encouraging you guys to use the free file, and the eligibility is, of course, W-2 income, Social Security income, unemployment income, 1099 interest, pension and annuities, Form 1099-R, and the credits that are eligible for direct file are the earned income tax credit, child tax credit, credit for other dependents, child and dependent care credit, premium tax credit, retirement savings contribution, and credit for the elderly or disabled. You can't use direct file if you itemize your return. So that will be something that you will not be able to utilize if you itemize your tax return. As all my coworkers have already stated to you, e-file, 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 e-file. Be careful of software that imports prior year information, especially if that information may be incorrect. This is only going to cause processing delays, and we don't want your return to be processed. So make sure that when you're filing, you have all your information. Do not file with your last pay stub. Make sure you have your W-2s, your 1099s, and all income documents, so that the information that you transmit to the IRS matches what we have on record. Reporting income, as I said, make sure you report everything, W-2s, 1099s, 1099Ks, any digital assets that you have. Please report this information. If you're employed, your employer normally has until January 31st to send you your year-end statements. These forms may start arriving at the beginning of February. As everyone has stated before, just make sure that you have all your information prior to filing, so that you don't have an issue with the IRS. So we have integrity and verification operations, and that's where we match what you send us against what we have on the system. If there's a mismatch on the system, the IRS will then reach out to you and ask you to send us the corrected information, or sometimes it may require you to file an amended tax return, and this is just going to delay your return getting processed. So we want you to get it as correct as possible the first time that you file it. The Taxpayer Advocate Service. So the Taxpayer Advocate Service, as Ms. Mathis said earlier, we are your voice at the IRS. There is a Taxpayer Advocate Office in every state, including Alaska, Hawaii, and Puerto Rico. The largest states have more than one office, such as California, Texas, and of course the state of New York. So New York, which is the state that we're in, there are 5 offices. So we have an office in Manhattan, one in Brooklyn, Brookhaven, Long Island, Buffalo, and Albany. So there's a taxpayer advocate office in all the states, so that if you have any issues with the IRS that you're not able to resolve through regular channels, you can reach out to us. Aptly, the form to come to us, being that we are the Problem Resolution Department of the IRS, is Form 911. So when you send us the Form 911, we'll assign a case advocate to work with you, and the advocate works with you one-on-one until your issue is resolved. Do you guys have any questions at this point?
Thank you very much, Ms. Bailey. Let me round up a few things that I would like to share that is very, very important. There's a couple of things I want to share with the group here. There's something called OBR, Offset Bypass Refund, and that is something that is administered with a taxpayer advocate Service Department. And the reason why I know is I was with Taxpayer Advocate Service for 10 years until recently transferring over to the Stakeholder Partnership and Education Department. Both Ms. Bailey and Ms. Mathis I know very well, and I have the opportunity to work with both of them as their senior manager. And so one thing that I would like to talk about the OBR is generally when you owe taxes to the Internal Revenue Service, when you file your tax and you're going to get a refund, IRS will not give you that refund. They will use that money to offset the taxes that you owe. But if you do have a hardship situation that you need the money for survival, for upkeep, for health and welfare, then you can come to the Taxpayer Advocate Service, and Taxpayer Advocate Service will work with you. So Internal Revenue Service will not take your refund by law or as they practice, but then give you the amount of money. All depends on a hardship situation, how much you can prove your hardship is. And the hardship could be anything that is affect health and welfare. For example, your vehicle is your means of transportation to work. Your vehicle is broken down. You need to repair that vehicle so you'll be able to go to work and make money. That can be considered a hardship situation because without fixing that vehicle, you will not be able to have transportation to your work to make money or earn salary to be able to feed yourself and your family. So you will get estimated amount of how much it will cost to fix the vehicle. So that's the part that IRS is going to release to you. There's a caveat to that. If you owe, what is the other department? Bureau of Physical Services. If you have any debt with the Bureau of Physical Services, then IRS is not going to give on an OBR unless your refund is more than the amount of money that you owe to Bureau of Physical Services, which could be a child support, which could be a state tax that you owe, a student loan, and things like that has not been paid, that has been reported to Bureau of Physical Services. So that is that part. It is a good program that Taxpayer Advocate run, and it helps individuals who are in bad situations. Another one is OIC, Offer in Compromise. If you owe taxes and you cannot pay, IRS do have a program called Offer in Compromise. Many times you hear on the radio or TV, somebody will say, oh, I owe IRS 100,000, I only pay 2,000. And sometimes you have these CPAs and accountants will market that, and some other tax firms will market that and say, oh, if you owe IRS, call them and they will help you and you pay pennies on the dollar. That is program that you can go through yourself. You don't need to pay anybody for that program. Taxpayer Advocate can be instrumental in that. It's a form that you fill. It's a hardship. It's a need-based program, meaning you don't have enough money to take care of yourself and pay IRS debt. You can offer. So it don't matter how much you owe. Whatever amount that you can pay, that is something that you can offer. For example, you can owe $100,000. You don't have a home, you don't have no equity, you don't have a job, you're unemployed, you're on Social Security, you're on fixed income. The only amount you can pay is $100. You could offer that amount of $100, provided you have supporting documents to show on your 433A, and IRS could accept $100 and settle on that $100 instead of the $100,000 that you owe. Of course, you're not going to go back and continue to accrue more taxes. It's a program that when you are being accepted into the program, you go and you don't say no more. Though that is that type of the program. Passport certification and decertification. If you owe taxes, that is considered seriously delinquent. IRS will certify your account with Department of State, meaning if you're an American citizen, you're trying to get a passport and your account has been certified with a Department of State, they will not issue you a passport. That is if you are applying for a new passport. If you also have a passport and the passport has expired and you're trying to get a renewal and your account has also been certified with the Department of State, they will not issue you a passport. And the amount of money that is considered seriously delinquent is about $64,000. This amount changes yearly with inflation. So if you owe 60,000, 64,000 or more, and you don't take steps to resolve it with Internal Revenue Service, if you're an American citizen, you're applying or trying to renew your passport, IRS, Department of State will not issue you that passport. So those are the few things that I want to add to what has been said so far. Now you can take steps in resolving your taxes by number one, applying for offer in compromise that I mentioned. Also, installment agreement is also another way. Currently not collectible is also another way, meaning you don't have enough money considering your allowable living expenses. And so for that reason, IRS is going to put your account on hold because you don't have enough money to pay right now. Now, those are temporary. IRS will come back to assess your financial situation every 6 months to a year to see if your financial situation has changed. And if that has changed, then they will look for you getting into some type of payment agreement or full payment. So that is a few things that I want to add to what has been shared so far. Mr. Ofosiweboa, I will yield the floor to you now so we can proceed to Q&A section.
Thank you so much. So very much. If we were in church, we'll be clapping by now because it was a great presentation. So now I will yield, and I do not have any questions in the chat, but we have up to 20 minutes for Q&A. Then we'll yield the last 10 minutes to the chairperson, and for also vote of thanks, then we can end exactly at 10 p.m. So now, if there's anybody with a question, please use the reaction button and just raise your hand. So also I can see Ohima's hand is up. Ohima, please, you're up.
Oh, thank you for the opportunity. Please, my question is, I have a friend, she and the husband came here last year, I think around May. By November, their kids joined them from Ghana, and the kids did not get their social security. They are supposed to get it this month. So I want to ask if the parent can file tax with the kids. Thank you.
Bravo. Sorry.
All right, so
Miss
Miss Bailey, Miss Mathis, or Miss Nagua, and also Miss Brenda Stewart. The question is, if the individual was here, then at some point in time, the husband joined them. The husband joined the spouse. The kids came later on. The kids don't have Social Security, but they'll be having Social Security very soon. Can they claim them with as a dependent for the 2024?
So what do you mean that they're going to have a Social Security soon? What is their immigration status?
They have the green card. But when they came, when you want to get your social security, you go there and they will set appointment for you. They came November, but they gave them the appointment this month, January. So as of now, they don't have it.
Okay, so I would follow up with that. It takes 2 weeks to get a Social Security card. When you go into the Social Security number and you fill out the SS5 application and present proof of immigration, the DHS actually issues the Social Security number the very next day. So if they've already gone and filled out for Social Security, they can go back to Social Security and get the number, and not necessarily the card, but request the number. If they're planning to claim the children on their taxes for tax credits, then they would need Social Security. Most tax credits, the children need Social Security, like EITC and so forth. The children would need Social Security numbers.
Okay, the question here, Awad, is I guess also because the socials will be issued in 2025. So
Yes.
the kids didn't have socials in 2024. So they wouldn't be able to be claimed for the 2024 tax return, and the kids didn't get. Okay, so they came in November. They didn't get an appointment until this year.
Until
So
January.
it's
Yes.
gonna be a 2025 social security number. So for our purposes, the kids would have showed as not having a social for 2024.
But okay, so the day they are eligible to get a social security number,
Mhm.
they was was November of 2024.
Correct.
So then they can put them on the 2024 taxes, even though the social security numbers don't have an issue and expiration date. If the children were in the country in 2024, they can be claimed, even though the number is not going to be issued until 2025. It doesn't matter because there's no issue date on the Social Security number does not have an issue or an expiration date. So if they were entitled to have Social Security numbers in 2024, but it just so happened that they didn't get it until 2025, they can still claim the children on the 2024 with the Social Security number.
All right, so 2024, the kids came in to live with the parents. So as long as they came in to live with the parents in 2024, then if the Social Security come out later on, at least they were here. So supposing they file an IRS decline or deny them, and they have to prove residency for whatever reason, I'm assuming since they came here in November, they're doing something that can show proof that they were here in 2024, i.e., they are in school, so they can get a school record that will have their address on it, which will show the parents' address. So then they can meet the residency test. Now, they're also going to meet the family test because they are their kids. And so that will be something that they will meet that requirement as well. And so, in as much as the Social Security is going to be given in 2025, the tax return actually is not due till April 15th. So, if they can have, I will not file the tax return though until they receive the Social Security number because the tax itself is not due till April 15th. So, there's no need to rush and file it without the case and later on trying to file amendment and add the case later on. I'll take time. I'll wait till the Social Security come. The taxes are not due to April 14. They were here in 2024. There's documents, evidence to show that they are plane ticket. There's so many things that they can show to in case IRS denied them. There's so many things that they can show that they were actually in country in 2024. So for that reason, I'll go ahead and claim them and keep records that should in case IRS come back and say no for whatever reason, then you can prove that they were here.
I just want to like stress with the Social Security, it should not take more than 2 weeks. They usually issue a letter that says we submitted the application. Don't wait more than 2 weeks because if the application got stuck and they have to put it through again, you may be sitting there thinking, well, maybe it's delayed in the mail or something. If they cannot deliver it, they send it back and so forth. So if exactly 2 weeks from when you filed for Social Security, you don't have that card, you need to contact the Social Security office.
So another thing that I also like to mention when we talk about the EITC, we're mentioning about 6 months, right? 6 months living together. November is less than 6 months, but that is if you get picked for audit. That's a possibility, but it's not always. How many returns got picked for audit? Very small amount. But if you get picked up for audit, then IRS may come out and use technicality of the timing of when they came in, because for EITC purposes, one of the requirements we talk about was 6 months residing together. And so that may be something that can come in the back end. Again, if the individual not get picked for audit, then this may not come up. But if they get picked for audit possibility, it may come up as well. So that's another thing that you want to put in the back of your head. If you put on and you get a refund, I will be cautious in spending all the money at one time. should in case you get picked up for audit, so you have the money to return if that become an issue down the line.
Thank you so much, people. We have Higgins and Higgins iPhone. After that, we go to the chat for 4 questions. Then I will see if there's anything by that time. Higa. Okay. I guess Higa is quiet. The first question.
Hello.
Okay.
Sorry. My question is about the payments. The payment agreements, if you owe the IRS and you have to make an agreement with them. Is it interest-free or we have to pay interest when you're signing for the agreement?
The payment, you will continue to pay interest, and if there's penalties on it, that will also continue to be on until it is level or until you full pay everything. So installment agreement does not stop interest and penalty. So sometimes I'll advise people, if you can get a loan from a family, friend, even a bank to pay IRS, go ahead and do so. Bank will only charge you interest, one interest. Depending on your when you file your taxes, IRS could be charging you penalty for failure to do estimated payment, penalty for filing or late filing, and also interest. So when you put all these things together, sometimes it may be cheaper to get a bank loan to pay IRS and be free. But that is all something that I know bank loan will also look at your credit score and all those things. But if you get an interest-free loan from a family member, friend, or whoever, that may be your cheapest way. But once you owe IRS, interest and penalty will continue to accrue. Now, there may be instances that you can apply for interest penalty abatement if you have a reasonable cost. But interest rarely would IRS abate interest. Penalty can be abated depending on if you have what we call reasonable cost. Once you have a reasonable cost, IRS can look at that. Also, IRS also have a program called first time abatement. If you have not received any abatement before and you owe taxes and you want to utilize the first time abatement, you can. In Taxpayer Advocate, we highly educate taxpayers not to abuse that first time abatement, because if you owe a very small amount of penalty, you don't want to use that. You may need that down the road when you may have a bigger penalty that you want to be abated. So you want to be careful in using the first time abatement option, that if it's small penalty, write it on and pay versus using the first time abatement. Because once you use it, you cannot use it again in your lifetime.
Thank you so much, sir. I want to go into the chat because there's some questions in the chat. I'm going to combine some questions and I'll ask 2 questions so you can answer the 2 at a time instead of doing 1 at a time. The first question says, what is the purpose of the IRS tax code 7702 and how can the average American worker make use of it? And the second one says, how long does the IRS audit us after filing for a tax? Can I be audited for the past 3 years or more after filing a tax?
Okay, so Ms. Bailey, if you want to handle the auditing part or the auditing aspect of the question.
And what was the IRM? What was the IRM question? She wanted to know what was the
Internal Revenue Code 7702, I believe.
7702, that's what she said, yes.
Okay. And then the auditing aspect, Ms. Bailey, can you take that?
Ms. Bailey, you want me to read back the question?
Yes.
It says, how long does the IRS audit us after filing for a tax? Can I be audited for the past 3 years or more after filing a tax?
We normally tell people to keep your documents for 3 years. But it depends. I may be an auditor and auditing a tax return. So you usually look at the year before, the year after. If the taxpayer is going through like a preparer situation and we have a preparer that's been doing your returns for a number of years and the returns are suspect, we may pick up a few of the years. So as far as how many years, it depends on if there's fraud on the account or there's other things on the account. But for the most part, you should keep your records at 3 to 7 years.
3 to 7 years. Thank
So
you.
another thing too that I also want to add, especially EITC, right? EITC is a very fantastic program passed by Congress to help alleviate poverty in the low-income community. But very often that is also heavily abused. And so if you get picked up for EITC audit, you best believe they can look a couple of years to see if there's a pattern there. Now, you could be banned for EITC for 2 years or 10 years, depending on how egregious it is. And so that is one area that when you get picked up for, it can go a little lengthy because that program by itself is heavily abused and there's a lot of fraud in that area. And so as of now, if you file taxes and you even claim EITC, education credit, and a few other things, you're not going to get your refund till after February 15. That will probably lead you to somewhere by the end of February or early March if you do claim EITC, child tax credit, additional child tax credit, and education credit. Because those are credits that are heavily abused. And so if you are going to be taking some of these credits, you want to make sure that you have what it takes to take it. And then if there's any associated document, you keep it as long as you can, because you could be banned for 2 years or 10 years, depending on how egregious it is. And you don't want that because it's a free program, free money that you can add to your refund to help solve one or two issues. So you want to be careful in that. Now, for audit purposes, I always say this: if you get a letter from Internal Revenue Service and is dealing with auditing, it's a matter of you proving the fact, proving your case. And so it's going to be dealing with supporting documentation. Make sure you keep your records. That's the best you can do. Now, there are instances where you have a audit done and an IRS will not either reduce or take certain things off and give you with a huge liability. There's something called audit reconsideration. You can come back for reconsideration, but you can only bring documents that have not been looked at before. So if you have XYZ docs for your audit and it was not accepted and the liability still stay, or they strip you of other things, then you can come back with other documentation for reconsideration. Taxpayer advocate can be very helpful in that area as well.
Thank you, sir. My question on the tax code was not answered. Yes, the 7702.
So did any of you able to pull that out? Internal Revenue Code 7702.
7702. Is that about life insurance?
The question says, what is the purpose of the IRS tax code 70, and how can the average American worker make use of it? That was just the question in the chat room.
I think we would need to come back to that. I mean,
Okay.
because
Yeah,
that's
because we
not
have to
our
look at what
expertise.
7702
Okay.
is. What I'm
Okay.
going to do is the questions that are not being answered here right now, we'll take all of them and then we'll get the answers and then we'll share that with the DSS director or DSS team so that can